What is also important is the VIX. What I'm always looking at is the VIX. And it was quite interesting. The VIX was up yesterday a little bit. And today with the market also a little bit down. So normally they are negative correlated. So when the market goes up, the VIX goes down and otherwise. And what I'm watching here is what you see is the cycle of the VIX. So the VIX is a volatility index calculated based on options and so on. Yeah, so it is a measure of the fear in the market. And what you see here and what you have to know maybe is the VIX. Who doesn't notice it? You don't have a long-term trend. The VIX is always mean reverting. So it goes up and it comes down again. But what we have is are like these big spikes. What you see is I plotted an average cycle of several significant cycles in the VIX. And what you see here is that we cycle-wise, so based on the historical moves of the VIX, it was predictable that we will have a low here. It's not guaranteed that this is an absolute low, but we have a low here. In this case, it was a low, and it isn't, yeah, if you want an absolute low, we are breaking lower lows here.
So that's shocking, eh? Because that basically says we're about to puke out here.
Yeah, and that's it. So, and generally it is so if the market participants feel quite comfortable in the market, that is, and especially if the VIX is below 20, that is a no-brainer market. So everybody can make money in this environment. But this is also what you see here in the past.
If anything, it almost feels like retail's walking into a trap, getting bullish here, right?
Yeah, that's also my opinion, and that's why you are all here. Because we are not the retailers, or we are not acting like the retailers. And I think this is a big trap where the retailers get into it. And what I saw in the past is what you see here on the left side, that we had over 2021 till 22, we had the low of the VIX was down in the 15, 16. Then the last year, and generally, when we come down here, the VIX goes up. We come down, it goes up. Then the last year, we had a shift of the absolute low. I say absolute, it's not the absolute low, but it was that the average low just shifted up to the 18 area. So now we are here again. And normally, I would expect that we would have an impulsive move of the VIX upwards, what generally would mean that the market comes down. It's not a must, but this is what history shows us, and this is what I expect. So the chances or the probability is currently higher that we will have a higher VIX, and that means a lower market. What I could also expect is, like we had the shift of the VIX one step up, maybe we are coming into a phase where the VIX maybe will come down, what nobody will expect. And, you know, when everybody thinks the same in the market, it would not work. There must be the other side, but especially for the institutionals. But maybe this is when this would happen, I say if it would happen, we will see higher highs in the market and stocks just ramping up. And when you have the feeling and all the bears give up and capitulate, and you think, okay, we now will only have a bull market again, then that's the moment I think where we'll have this year. And at the moment, it looks like that we will have it around March to April, around this area. And yeah, so this is something interesting, what, an observation where I have an eye on. Do we go lower and make lower lows? And this is also a chart, so you can chart this like every other chart. We made a lower low here, a new low. And if we go further down, like I said, we will have a significant up move in the market, but I think then we will just build up more downside. And the downfall will be harder. That is my opinion. And so watch this, guys. Scenario one is we turn around here. And scenario 2 would be that we move lower and we will have a quite significant bull market. And then Jim Cramer would be right. And because he said buy the dip. And yeah, so that is something where I have an eye on.